We have been getting updates from the Fed increasingly, as they have said that all of this is tied to the way that the country and overall communities around the country really respond on a local level to this pandemic. And that was the update we got as well from the Dallas Fed president earlier today, speaking with Fox Business. I want to get to what he had to say with Yahoo Finance's Brian Cheung for more on the way that the Fed continues to think about this. And Brian, it sounds like he was really echoing the sentiment that we've heard all along from Fed Chair Jay Powell, talking about the way that we control this pandemic is ultimately what's going to be the leading factor in how quickly the economy can get back to normal.
Well, Zach, we've heard this from the start that the Federal Reserve has insisted that as policymakers, they can only do so much for what is primarily an epidemiological problem here. And you have Dallas Fed President Robert Kaplan taking that to the next level by saying specifically to everyone, wear a mask. Here's what he had to say to Fox Business this morning.
If we all wore a mask, it would substantially mute the transmission of this disease, and we would grow faster. We would have a lower unemployment rate, we'd grow faster, and would be far less likely to slow some of our reopenings.
And this is exactly what you've heard from the likes of Goldman Sachs, for example, which had that note not too long ago saying that a national mandate coming from the federal government, from the White House perhaps, could prevent what otherwise would have been a subtraction of 5% to U.S. GDP. So now you're starting to hear economic policymakers like Robert Kaplan, who, by the way, is a voting member of this year's Federal Open Market Committee, saying if everyone wears a mask, we can really make sure that we can avoid any sort of further shutdowns, perhaps a second wave that might trigger a second shutdown, and then get this U.S. economy back on track. So very much economic implications to what is mostly a political kind of issue right now with whether or not people should be wearing masks.
Yeah, and as you've said there, I mean, it is ultimately the health problem that we're focusing on here. Not to say that the Fed has not been active in doing their part, at least making sure that this problem, this economic slowdown, didn't turn into something even worse than what we've seen so far. But interesting to note here that the balance sheet has contracted over the last week by about $88 billion, now sitting below $7 trillion. I'm not sure if there's a lot in your mind to make of that, but also, of course, they've also been pulling their other levers here in terms of finally buying bonds from companies directly. Again, something that we haven't seen the Fed do before. What's the update on where they're putting their money to work on that front?
Well, there's no secret, Zach, that the Fed balance sheet has ballooned to new record levels. It seemed like for a long time it was blowing through new record after new record. But as you mentioned, the Fed balance sheet has been shrinking, not by a lot, but it did tilt back below $7 trillion for the first time since it breached that point in time only a few weeks ago. Now, the concern here is also how is the Federal Reserve doing that? And what's obviously in focus is its corporate credit facilities, its purchases of individual bonds in the primary and the secondary market, in addition to the purchase of bond ETFs. Now, the Federal Reserve's purchases over the last period that it disclosed, which was the last 2 weeks of June, said that the top purchases that it made during that period of time were in AT&T, Verizon, which, by the way, is Yahoo Finance's parent company, Apple, Cigna Corporation, Berkshire Hathaway, Bayer, Ford, BMW, Oracle, and Daimler Chrysler. Now, the Federal Reserve is not just buying these bonds on a kind of willy-nilly, however it kind of feels like based on the way it's waking up in the morning. The Federal Reserve has what they call a broad market index. It wants to purchase bonds that are representative of the entire equities market. So that includes over 500 different companies, and the Federal Reserve has very much publicly disclosed that. But that's not going to stop people from scratching their heads wondering why Apple, with the company that large with the amount of cash that it has, needs the Federal Reserve to buy its bonds. But again, the Federal Reserve insisting this is a broad market index. We don't want to pick winners and losers, and we need to pick both winners and losers. So that's something that's definitely going to be worth watching. But by the way, its bond purchases and ETF holdings are only about $10 billion. Keep in mind, the Federal Reserve has committed up to $750 billion if it needed to. So still very much a drop in the bucket.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.